And nice headgear that you've got on today, Rob. It's a shame to see that you can't be out on the streets at this stage.
Yes, well, keeping the gears on the trading floor, definitely, and everybody's really excited here, and Sandton as Bafana comes through Sandton, so exciting times for South Africa.
Well, exciting times for South Africa. The markets with that looking a bit positive, thank God today. We've got activity on the market scene, keeping things pretty positive. Run us through the kind of activity you're seeing, though, where one would assume many traders are out on the streets blowing their vuvuzelas this afternoon.
Yes, definitely. But I think yesterday the market closed very weak and most of the stocks closed at their lows. And so we see some buying coming back into the market today and a much firmer market today. We see that the Dow, very volatile session. It was negative and positive 10 to 11 times during the trade yesterday. And I think that the bulls won yesterday and we're following on from that trend. So a little buying coming back into the market. Of
course, international markets providing some direction, and with that there's support coming from resources. Gold miners, though, backtracking a bit. So let's take a look at the pullback we've seen come to the surface today. Has this been a necessary move in your books?
Well, I think that obviously with the gold price reaching all-time highs, we're taking a little profit taking coming in. I think that that move on the Dow, which was positive and a little bit of risk appetite coming back, people started to sell their gold position. So I think that the gold miners coming off today is expected.
Well, let's take a look at mining operators themselves, because, I mean, there's a kind of a shift that needs to happen, one would assume, where we're seeing currently miners mining low grade at high cost, and there needs to be a shift from high grade, low cost. So pretty much an inverse of what we're seeing play out at the moment. How confident are you in that shift actually emerging?
Well, it's very difficult at the moment for South African miners. Some of the foreign miners have got much higher yielding gold mines at a really good cost. In South Africa, we've got a lot of problems. We've got very deep mining activities. Some of the goldfields mines are down at 3 kilometers. So it is expensive gold mining, and they have to try and find new deposits at depths that aren't as deep. So it is very difficult for South African miners to get that high yielding, low cost mining, and it's a difficult process for them at the moment. But a very good gold price for them now, and a rand which has weakened over the last month or two is definitely helping them.
What's your outlook for that gold price? Because it's only reached that intraday high, but it hasn't broken that level just yet.
Well, obviously the European markets with the debt contagion is what's keeping that gold where it is currently. If that debt contagion starts to worsen, I think we can break those highs and the gold price move forward. If we start to see some settling in that European debt contagion and a little bit of risk appetite come back, the gold price will come off. So we had a cusp at the moment.
Well, staying in the resources space, we've had coal producer Wescoal announce that annual headline earnings per share slumped by more than 2/3 as manufacturing activity slowed, and that actually reducing demand for its coal. What have been your impressions of those numbers?
It's not a company that we look at in depth up here on the trading floor, but just looking at it briefly. Obviously, a lot of their coal is done internally and they don't export, and there's been a very good export price for coal, around $90 a ton. And a lot of their coal that they're using, that they get out of their mines, are going to local manufacturing. And obviously, with a big recession in the market in the last year, manufacturers have been under pressure and they haven't been able to sell as much coal. So if that recovery starts to happen and we start to see those manufacturing numbers start to improve, like they have over a month or two, we should see Wescoal coming back into the fore and earnings improving.
As is the case pertaining to the rand as well, because this is an operation that's been impacted by the rand, where we've seen a lot of strength filtered through to the local unit. Now weakness managing to cushion some of the company's performance in current times. But we had Dawie Root in studio late last week saying that he sees the local unit strengthening quite a bit moving forward. So there's still quite a bit of risk ahead for this company.
Yes, if they're expecting to make earnings just on a weak rand, I think that's not a good enough business case. The rand surprises always on the strong side in the last 2 years. So we'll just have to take a look at that and see where that rand's going to go. It's very difficult to call the rand. Currently 780 hasn't been able to break up through, 780 is holding quite well, and 8 rand as well. So we haven't broken through that 8 rand barrier yet. So If we break through there, then obviously it will help Wescoal, but I wouldn't bet against the rand.
Well, another operation out with numbers today being impacted by the strong rand and lower domestic economic activity as well has been Omnia Holdings. It reported an 88% slump in annual diluted HEPS. It's fallen back to 123.8 cents. Overall impressions there?
Yes, so we had a very big crop in the maize and the wheat in South Africa, and obviously the fertilizer business did quite well from there, from the amount of fertilizer they used, but at the same time they had a write-down there of 300 million. So quite surprising there on the fertilizer side. Obviously on the recession side, the chemical division has done very poorly, and we need obviously the manufacturing again and the chemical sector to improve in South Africa. So we need to employ more workers. The employment level needs to come up. Otherwise, Omnia are going to battle for the next 6 months again.
Well, they are making some strides in diversifying their business. The group are pretty optimistic about the future, saying that it's because they're going to be focusing on biofuels, which should favour that fertilizer business moving forward as well. What's your view on that arm that it's actually developing right now?
I haven't looked at it in detail, but biofuels, one of the things against biofuels is obviously that you need somewhere functionality to get those biofuels out to the public. So if you've got pumps around at BP, you can go get some biofuel. So you have to have a lot of infrastructure spend there, and so that will be quite interesting to see if they, even though they develop the biofuels, will they be able to move that away from their chemical factories and onto the general public.